Hello, and welcome to Bite Size Legal, where we tackle legal issues one bite at a time. My name is Drew Jenkins, and I'm an attorney licensed in Georgia and Alabama. And today, we are taking a bite out of corporate taxation. We are continuing our series of starting your new business to ring in the new year. We have previously covered sole proprietorships, general partnerships, limited partnerships, and last episode, we took our first bite out of corporations. So a quick recap, the corporation is the first business entity type that provides limited liability for all participants. Now, this will come at a cost that can be entirely eliminated by choosing another entity, a much newer entity type called LLCs and LLPs. But corporations also provide a wealth of benefits that are oftentimes overlooked in the tax realm. Now, while corporate taxation is probably an entire course in and of itself, we're going to hit some of the highlights today. We're going to take some bites out of it. So the first bite is double taxation. Because the corporation is treated as a fictional person at law, the federal government decided a while back that, since you pay taxes, we believe that a fictional person should also pay taxes. And so there is an entire section devoted to the taxation of corporations. Now, with anything the government does, there are lots of rules, and there are lots of exceptions to rules, and there are exceptions to the exceptions of rules, which is why if you do decide to start a corporation, I strongly advise you seek out the help of a CPA who specializes in corporate taxation, because you will find that there may be benefits there that outweigh the cost of a corporation as opposed to other entity types. I'm not going into that because I am not well versed enough in it to tell you, but I do know that there are some benefits that exist. But here's the drawback. The corporation is going to pay taxes. All of the previous entities that we have discussed and all of the entities that we will be discussing ultimately have any of the gain or the profit of the company flows back to the personal tax statements of the owners, members, partners, whatever you want to call them. But in a corporation, it doesn't work that way. The corporation itself will engage in business, it will generate revenue, and it will generate expenses. At the end of the year, if there's a profit, the corporation, as a fictional person, as a separate taxpayer, will pay federal income taxes on that profit. If there is loss, those losses will stay within the company. Nothing will flow out directly to the shareholders. After the taxes are paid or the losses are or if you take a loss, then it's going to be return of capital, right? Because there was no money made that year. And then the owners or the shareholders will wind up paying taxes on the dividends, right? And when you sell it, it's going to be a long-term capital gain. So things operate a little bit differently at the corporate level. So that's bite number one. Bite number two is that there are ways working with the CPA to minimize some of that and how you operate your company, how you categorize expenditures, basically, and how the thing is run. Again, a CPA is going to be worth more here than probably a lawyer, although there are lawyers that specialize in this, and you should seek them out as well. Now, another way that a corporation is taxed differently is, again, that gains and losses are trapped within the company. So if you are looking to have a business that's going to generate significant losses for the members, right, up front, corporation is probably not going to be your best bet. And by the same token, if you are trying to minimize your total tax burden, unless you make certain elections, and we'll talk about this in the future when known as an S-Corp, it's probably not going to be the right thing for you either. But if you're looking for the other ancillary benefits, such as how certain fringe benefits are treated or certain healthcare deductions and certain retirement issues are handled, then it's definitely worth a look for you. Also, if you zero out the corporation every year, such as you work for it yourself, then the company itself won't actually have profits. And these are all things to look out for when you are deciding to create a corporation and sort of the tax structure on it. Now, the good news about corporations are that you can obviously have multiple classes of stock, and you can treat all of the stock different, and you can weight it. So it's very similar to what you're capable of doing in a partnership or an LLC, which is going to be treated as a partnership at law. Another thing that you can do in a corporation is it actually allows you to sort of time income. And remember, if you're operating anything that's not taxed as a corporation, you have to account for the income or losses in the year in which it was incurred. We're not talking about accrual versus cash basis accounting here. We're just talking about on the sort of the tax side of things, right? So however, with a corporation, you can decide not to pay dividends in a given year. And so if most of your income comes that way, there is a way that you can sort of smooth out, if you need to, your income. Whereas when we're talking about partnerships or LLCs, which are generally taxed as partnerships, you're going to find that's not possible. And you're going to get taxed on phantom income, which is income the company made that we've talked about before, never went to your bank, but yet you owe money on it. In a corporation, this will never happen. You personally will only ever owe taxes on the money that actually makes it back to your bank account. Again, we're not talking about S corporations here. We're going to get into that topic at a later time. But to sort of give you a preview of what's coming up, there is a special election that was created for corporations. So in addition to being taxed differently, corporations also obviously operate differently than partnerships or sole proprietorships. Now, corporations existed long before the LLC and the LLP. So if you wanted to engage in business and protect yourself, like my father did in the 70s, you really had no choice but to create a corporation. However, corporations have a lot of rules. And fortunately for us, the federal and state governments recognize this, and the federal government created a subsection of a corporation that is known as an S corporation, right? It is subchapter S. And it allows us to keep the corporate form, but provides you with some tax benefits. And we're not going to cover that next week. We are going to get back into sort of operating corporations and how certain decisions are going to be made. But this is a topic that we're going to cover again shortly. So I appreciate you listening. I hope you found it informative, and if not, at least enjoyable. So feel free to leave comments below, and if you're watching in WeChat, ask any questions in thread, and I look forward to seeing you next week.